Okay, welcome out to Tackle Trading's halftime report. Here's our live daily YouTube show with Matt and myself. It's Coach Tim, Coach Matt from tackletrading.com. Matt, let's rock and roll. A lot going on in the market here today. We're in the middle of a week where you're going to have a lot of conversation about the Federal Reserve, and most of it is not substantive. You know, it doesn't really matter what the opinion of people is, what they actually do in September. But they're up there in Jackson Hole, you know, and Trump is tweeting about Jerome Powell and them raising rates, and it's in the news. What's your interpretation of the market performance today? Let's start with the S&P.
Well, I mean, the news headline out there, Tim, is basically optimism on trade talks, right? That these low-level trade talks that we're having with China this week is going to have an impact on the market. That it's going to basically, I read this one article today that basically said that Wall Street up, markets up on hope that there's going to be a cure this week for the trade wars. And I hate to be the bearer of bad news, but that's not going to happen this week. Even Trump came out and said that he doesn't really expect anything to really transpire out of these conversations. I honestly think this is a technical situation more than anything else. There's not a lot of economic news today. There's not very much geopolitical situations. We've had some decent earnings today coming into the market, kind of, you know, just a reminder that this earnings has been really good this quarter. So outside of that, I see this more as a technical bounce. The market wants to buy and it's buying.
You know, frankly, I think it's about the best quarter I can remember in as long as I've been trading, you know, in terms of
Oh, yeah.
earnings, actual performance. So many companies beating their expectations, coming out, performing well in the environment we're in. The market fundamentals haven't changed, and we've had a bullish position and bias on for months now. I mean, you know, on a daily basis, you don't really change your opinion too much. Maybe at the edges, maybe just a little bit, maintaining a +1 bullish bias here on the S&P. Now, we've looked at relative strength across every major index every day when we do this halftime report. The S&P is now testing the all-time high. Now, the only question I have, do you owe me a cheeseburger or do I owe you a steak? I can't remember, or vice versa. Who owes what? Was that, weren't we betting when it was going to hit the all-time high? I can't remember, but we're within 6 points.
Somebody's got to remember that. Somebody's got to remember that bet. We got to have somebody start tracking our bets. we got to have that, right?
I'll tell you, you know, I was checking the earnings reports today, and after the bell, Red Robin has earnings, and I instantly wanted to go for cheeseburgers after. So
listen, if we can figure out who won that bet, we might be going to Red Robin to celebrate today. But, you know, you look at the market, and we've talked about this before, how sometimes you just get this, you get the feeling, right, that the market just wants to hit that all-time high, right? And you're 5 points underneath that, 6 points underneath that right now. It could hit it today, no doubt about that. But I have a belief based on the technicals of the situation that we're not only going to hit that high, we're going to eventually break out of that high.
Yeah. 6 points away
here
today.
Tomorrow. But I mean, a lot of economic news this week, Wednesday, Thursday, Friday. But it does have that feeling that it wants to push.
Now, by the way, this is now 2 days in a row. I'm seeing it on my side. Cody, when we do our video on YouTube, does it go up over the top of those charts when they're breaking out? That might be the indicator we need, that if the video's covering the candlesticks, that's a buy signal, Matt, because that means it is breaking out at the very all-time high, probably showing
it could mean you need a bigger monitor too.
No, I'm telling you, I'm watching it. I know what I'm seeing, and I know that that's
on YouTube. It's coming across clear though, right?
Well, yeah, the video is clear, but then when we talk, it's over the top of your candle up there. C'est la vie. C'est la vie. Do not worry about it. Don't get stressed out. Let's go over to the NASDAQ. Now, and Cody, what I want you to do as producer is step back and go out and look and see if we can ever change the setting to put the videos on the top left. Give me, you know, an answer to that maybe by the end of the show. NQ here breaking out, showing some strength. That's perfect, by the way, right there, Matt. But it's not really broken the all-time high here. We had noticed this one was a pullback, changing momentum. You've got that 75.30 mark. Technology and the NASDAQ is the best performing index year to date, Matt. It's got some catch up to make here. What do you expect?
I fully expect 7,500 to be broken out eventually. I'm not going to make any trades on the NASDAQ in between that. We said yesterday this was forming a cup and handle. There's nothing that happened today that came off that. When you're analyzing a cup and handle type situation, and here's kind of the cup, and here's kind of the cup, and here's kind of the handle here. Here's your breakout point right there at 7,500. So when you're analyzing a cup and handle, you don't want to be aggressive within the pattern. You want to wait for the pattern to break out, kind of like we're seeing on the Russell 2000 today, which we'll get into here in just one moment. A breakout of 7,500 on the NASDAQ would be significant to me. Significant to the same degree that the Russell's breaking out today. The NASDAQ is the best performer year to date. NASDAQ's up, 13%. Dow's up close to 2%. S&P up 6%. Russell 2000, I believe, is up, 10%?
Somewhere around there, just underneath the NASDAQ, but probably going to play some catch up here soon.
I expect the Russell to run. That's what I expect, and we'll look at that here in just one second. But, the NASDAQ, best performer year to date. What's going to happen from the end of the year? The Russell could catch up, no doubt, but I still like the NASDAQ here. Even with the Russell breaking out, I still have the NASDAQ ranked number one on my type of bias. I love it here, and I love it even more in a breakout of 7,500.
I have been bullish on both for a long time. There's no doubt about it. I would be very interested in some of the big names in the market. I mean, Apple Computer hitting new highs today, Matt. Google was on a deep pullback. Microsoft was on my option report over the weekend. A lot of the big names, that have been on my watch list, very tradable for many years. I think they're going to be setting up nicely here. A review of the FANG stocks on a breakout later in the week would probably be appropriate. Let's take a look at the Dow Jones and, industrials have been playing catch up. We've talked about it every day. Now that you've broken out and now are hitting a new high, you could get one of those mini rotations institutions do all the time where they start taking profit on industrials. But clear sailing ahead, really. I mean, there's not a lot of weakness in that chart right now, just some concern about 26,000. Is that right?
I'm not concerned at 26,000. It is a whole number, and that certainly plays a little bit of role, a little bit of a role in the analysis. But at no point really, just a tad bit slow down here at the very, very first of the year, but nothing really that is major at 26,000. I really don't see a clear resistance zone once it gets above this previous level right here up until the very highs. I just believe that all these markets are going to be breaking out to all-time highs this year.
Well, and I think the story of the day, and in our production prep when we were talking, it really came down. You were talking about the Russell. I was talking about the Russell, small cap indexes. Industrials, the ES, the S&P, and the NASDAQ all look good, Matt, but there's not a single chart that looks better from an index perspective today than the Russell 2000. And the Russell is breaking that triple toposaurus, alligator mouth pattern, whatever you want to call it. It is opening the jaws of profit, and we are running here. That is a beautiful breakout candle. There's no real debate that's a breakout, correct?
Well, not at this point, no. There's no.
I did hear the caveat there, by the way.
Okay, at this point, but just to be technically correct here, a breakout has to close above those levels, and we still got a few hours in the trading day. You're looking at this from a potential breakout perspective, Tim. Big candle breaking out of the previous level of resistance. You cannot ask for a better technical type situation than the Russell breaking out right here. If you look at the volume, and again, we're only kind of halfway through the day here, Tim, we're starting to see volume get up into the daily averages that was seen over the course of the last few sessions. I expect that to see an increase in volume coming into the rest of the day. That's a positive sign on the breakout. A close above 1720 to me is significant, is a significant breakout. And, as we've talked in the past, these breakouts, especially on the Russell 2000, if they hold, and again, there's the key disclaimer there, if they hold, but they have a tendency to run fairly aggressively. And I think this is an excellent opportunity to look at the small and the mid cap index, both in terms of the index itself, the ETFs that track the index, and individual stocks that are listed in that index.
We don't always look at breadth indicators, but I want you to click on that ARCA high-low here. It's in green today, right underneath your RTY. This is a Coach Gino indicator measuring the 3-month highs on the entire archipelago. Am I saying that right, Matt? Archipelago, is that right?
Yeah, something like that.
Index, which measures all the different stocks in the market against the 3-month lows. And when it flashes green like this, very, very strong, Market is
Well,
showing internal strength.
Coach Gino is one of the best traders I've ever been around. An excellent trader, cash flow expert, you name it. And he uses this indicator to kind of see the overall mentality, the bias of the marketplace. And what he kind of looks at is any two green closes above 50 basically means that, more companies are setting all-time highs versus, all-time lows type of situation. And that is a very positive situation. And I mean, Tim, the last time we saw this much strength, and we can just call it the ARC, so we don't have to completely butcher that name all the time. But the last time we saw such a bullish mentality on the ARC was all the way back here in January. And in January, if you'll come back to the kind of the S&P 500, in January coming into this year, look what you had. You had the ARC showing increase in all-time highs, and you saw just the S&P just run aggressively. You're looking at we were talking about the Russell 2000, same type of thing, coming into January, this first part of the year just kind of ran here. You're looking at the Russell 2000 breaking out. You're looking at the S&P 500 breaking out. You're looking at a potential breakout of the NASDAQ this week at 7,500. You're looking at the Dow breaking out.
Time out.
Yeah, go ahead.
I'm out. I'm going to do something right now, whether you like it or not. Go up and click on style. Go back to the RTY. Click on style, settings. Give me on the time axis. Give me 100 bars, not 22. Good. Now, do you see where it says style and that candlestick is? That's where that video hits. And we're getting confirmation. It's looking good. It's only on the ones where we're at the top right of the chart breaking out. It does cover up the candlestick. So I think, and guys, if that's a better visual right there, say thank you. Let us know.
Is that only on your end, or is that on YouTube?
No, it's on YouTube. I'm watching the YouTube feed. Yep. Yeah, because Dave and Jacques and a few of our members are saying, our halftime crew representing, giving us a heads up. Yeah, they're saying thank you. All right, looks better. Okay, go ahead.
It's just a video from Zoom that's covering it up.
Yeah, it's your beautiful shining face right there. Smiling, headset on, my headset. So it's whenever we talk.
Okay. Does that change it?
No. I think we're good right now. I will keep you posted on what I see as accurately as I can.
Cody, please figure this out, because I don't want to stop the halftime report for this again.
Yep. RTY on a breakout here, Matt. Go ahead and continue your thought.
Yeah, what I was saying was when you're comparing the ARC and the strength of the ARC, and once again, this is measuring companies that are really setting these all-time highs here. When you're seeing 293 companies, and this is a representation around the top companies around the world. When you're seeing 293 companies setting all-time highs, when you're seeing yesterday 245 companies setting all-time highs, that is an indicator that shows there's a tremendous amount of momentum coming into the market. And, as a trader, you always kind of try to look for commonality. And the last time we saw this type of strength come into the ARC was in January of this year. And once again, in January of this year, coupled with breakouts on all the indexes, you saw one of the best months the market has had in quite some time. And by no means am I projecting to have that type of month in the market here, Tim, but I am seeing a lot of commonality there, and you're seeing a lot of strength coming into the market. I think this is a buyer's market, and I'm kind of waiting on the NASDAQ to break out of 7,500, but I'm very close to going positive too on the indexes.
Listen, if I wasn't such an old wimp, I would easily call this a +2 breakout on the Russell 2000. I mean, just reading the chart alone, I'm just not that aggressive anymore, Matt. I'm okay keeping a very moderate kind of stance, because I don't like to change my opinion that quickly when it comes to market posture. I've been trading too long, and we have a beautiful breakout. We have a strong candle. 1.5% on the Russell today is no joke, Matt. Breaking a triple top it's been setting for 2 months. Well, we might be underselling this, quite frankly.
We are old dogs, and we've seen markets get faked out, and we've seen these types of situations come right back down, called fake outs. We've seen those things, right? So we're a little conservative in that capacity, but the reality, Tim, is we've been primarily +1 since really kind of the end of 2015, outside of the 2017 +2, where we were basically fueling the market based on the tax cuts that came in November of that year. So for the most part, since the end of 2015, we've been, I would say 90% of the time would been +1, 5% of the time would probably been neutral to -1, and 90%, 5% would been +2. So why is that important? Well, it's important because it goes to strategy selection, it goes to hedging, it goes to cash flow systems. If I'm +2, Tim, I'm doing less covered calls, I'm doing less spreads, and I'm going straight directional. I'm getting aggressive. So even though it might not seem like a big deal, +1, +2, for me as the individual trader, that determines my approach to the entire marketplace.
Yeah, me too. And really that spread, the bull call spread is very appropriate in the market conditions that we're in. Debit spreads, diagonal spreads, there's a lot of intermediate spreads that I'm interested in. As we go through the different indexes, we've got to look at the VIX real quick. Market down at 12. It's becoming a mandatory thing. No rant today. I'm putting a stamp on it. Moving on, going on to, let's take a look at crude oil, Matt. Crude's got a double bottom developing. Long-term 200-day moving average sitting there on support. It's the same call I've had for a couple of weeks. I did the commodity report a couple of weeks ago, and I believe I'm going to be doing the other one for tackle trading this weekend, where I'll dive deep into this analysis, Matt. I'm long-term bullish, still short-term bearish, or neutral, somewhere in a 0 to a -1 on the short term. But that could easily change if you get a break back up above that little short-term support you've drawn there. Give me a thorough analysis of where crude oil is from a chart perspective.
You nailed it, Tim. You're long-term bullish, you're short-term neutral to slightly bearish, right? I mean, you're looking at a little bit of a bounce off the 200-day moving average, also 64, which was an old support level. That gives a little bit of optimism for the marketplace. But I don't see this as overtly aggressive bouncing here. I don't see this as a directional trade, and there's no way I would take a directional trade above 66. You might be selling put options or credit spreads down below major support levels, but I don't see a directional trade here on crude.
Yeah, I don't either. If I'm going to go directional, probably going to end up looking in the energy sector. There are some stocks that I'd be more interested in than, say, even crude. We had a couple recently on our reports, NOV, those types.
I just see this situation as something that could go either way fairly aggressively right here, Tim.
Well, I mean, that does bring it up then. Why not a bi-directional trade? You could
straddle on USO,
something like that, straddle USO and wait for the movement one way or the other, grab calls and puts on the ETF.
Straddle on USO here, kind of in no man's land type thing. And again, USO does not track crude 100%. It tracks it most of the time. But as crude is sitting on the 200-day moving average, you're still seeing USO well above it. So it doesn't track 1-to-1, but it's a pretty similar type trend and pattern. If you're looking at a potential straddle on this, Tim, I think it could go fairly aggressively one way or the other, but I still think you need time on this trade. Right?
Mm-hmm.
It could hover around that level, consolidate, form symmetrical triangles, descending triangles, you name it. I think you got to go a little bit more time here and look at some type of straddle trade where you're buying basically an at the money option on both a call and a put option. Obviously your biggest risk here is the time decay factor. As time goes on, you're going to lose time value on this. That's why you have to buy a little bit more time. But I like that type of movement on the Russell, on the crude oil here. I don't think you can go directional, and anytime you don't think you can go directional, you can certainly look at something like a straddle.
Looking at the implied volatility on the individual options for USO, you're at 25% in October, 59 days. Would that be, to me, that's probably enough time for a straddle here. I don't like to ever carry the options to when they're within 30 days. But we only have two choices, Matt. You can go October at 59 or the January at 150, and that's a big gap.
It's a massive gap. Obviously, I would love a November or December option here to do it at. But Tim, I could certainly see you being in this trade 20, 25 days, right? Mm-hmm. And if you're in this trade 20, 25 days, Tim, you're going to get eaten up by time decay a little bit. You're going to need a bigger, stronger movement. So I think going out a little bit more time is probably a little safer here, because it's really hard to determine that date when you don't know exactly how long you're going to be in the trade, right? When, like, for example, when I'm looking at a trade on Mosaic, and we're going to get back into the Russell here in just one sec because I want to have a talk on it. Not Altria Group, although that looks like a shorting opportunity. Here on Mosaic here, Tim, I'm looking at making a trade here on Mosaic once it gets back above 30. So it closed above 30. I'm looking to go directional on this. I can determine based on the historical trend and pattern how long typically I should be in this trade. So for example, from this higher high right there, higher low, this type of pattern from the support to resistance, you're looking at about a month of data here, right? From this one to this one, you're looking at about a month of data here. So I can have a reasonable expectation that I'm going to be in this trade on Mosaic at about 30 days. And I know when I'm looking at making a trade here, I know if I buy 30 days of time, and I'm going to come down to a 0.60 delta right there, I'm going to lose a certain percentage of the time value with 30 days left. I know if I come down to the 0.60 delta, I'm going to lose a certain time value of the option. If I go out to 120 days, I'm going to lose a certain time value of the option. So for example, with 30 days left in the trade, I might be losing 1 to 2% of the value of the option every single day. With 60 days left, I'm losing 1%. With 6 months, I'm losing like 0.003% the value of the option. So I know if I need to be in the trade 30 days, I need to go out at least 90 days in time. I can determine that based on the trend and the pattern. So on Mosaic, even though I'm only going to be in the trade 30 days, I know I need to go out to December to buy those call options to buy enough time to offset the time decay. But when I'm looking at USO here and I'm looking at a potential on, a straddle type situation on crude oil, Tim, I don't know how long it's going to take for crude oil to move. I don't know that. I mean, what if we see a scenario like this that lasted for 2.5, 3 weeks, where it basically just goes up a little bit, down a little bit. I'm going to basically break even on delta, but I'm going to lose value on theta, and that's going to get higher and higher and higher as it gets down into that 30-day number. So for me, on a straddle such as the one I'm looking at on crude, I think you got to be a little bit more conservative, revert to more time frame so that theta doesn't impact that trade. Now, if I'm looking at an earnings straddle where I'm buying it for 5 weeks before the earnings announcement, I know exactly how much time I need to buy. But this isn't that. This is a situation where we don't know how long it's going to take to move. It could stagnate for some time. I mean, you said it, Tim, long-term bullish, short-term neutral to slightly bearish. You're going to get a convolution of price action coming into here. How long could it take? Who knows? It could take 2 days, but it also could take 2 months. So I need to be a little bit more conservative in that.
Always buy more time than you think you need. I think that's really the takeaway there, Matt. You can start breaking down what the theta rates are and get very analytical, and that's always very helpful. But
again,
yeah,
it's just, if you can determine the time frame in the trade, it's easy. If you can't determine the time frame in the trade, you have to go more time.
Absolutely. And I'll tell you, USO is a bi-directional trade. Does make sense to me. Whether or not I'd end up with a straddle or a strangle or a debicon or an inverted fly.
I think you got little risk for a little return.
Keep it simple. Keep it simple. We'll come back. Hopefully, actually, I would much just prefer that crude oil picks a direction, then I play it directionally, so that may end up being the play. Just patience on that.
Well, that's some of the best trades people could ever make, is the ones you're patient and you let kind of set up.
Yeah. Gold is coming back, Matt. We talked about, and we really did some forecasting here throughout the last couple of weeks. We're bearish on metals.
Forecasting. If you call forecasting saying exactly what it's going to do for weeks at a time, that's forecasting.
Yes. Okay.
I'm giving you credit on it, is what I'm saying.
So,
I mean, last week we said, okay, it's gonna slow down. It's gonna retrace back up into resistance. The bulls are gonna get excited, and the bears are gonna come in and smack them in the face.
So this way, where my head's at right now, it's a perfect, picturesque setup for a bearish retracement, but it hasn't confirmed yet. And so now you have some complexity here on timing, because you can doji up in here for days. I mean, we don't know when that trigger is going to happen. If it pivoted and triggered from here, Matt, let's say strong red candle tomorrow, is that an entry point?
Absolutely.
Yeah.
100%. I mean, I love the retracement coming into 1200. Would have loved it back up here around 1210. So you still have, you're basically what this small candle signifies is just slowing momentum. It is not a short trigger. You got to wait for that to turn around, come back down, and then short trigger on the downside. But it's not just really kind of gold looking at this, Tim. Silver's looking at a very similar type situation. In fact, silver probably has a little bit more momentum to the downside than gold does. When you're looking at platinum and palladium, platinum actually showing a little bit of relative strength here, Tim, over the course of the last few days. But you're looking at palladium here showing a picture perfect bearish retracement coming down into the breakout channel right here at 800. So when I'm looking at these metals here, all of them are all of them are very bearish. Palladium showing a little bit of relative strength to the upside, but platinum, gold, silver, all of them showing weakness coming into the resistance zones. I'm looking at this potential on platinum and gold specifically, but yeah, all of them are starting to turn around. And couple that, and this is kind of getting me excited, guys, but couple that with the dollar index here. The dollar index showing tremendous weakness over the last week, kind of got to beat it up a little bit on Trump's remarks to Reuters today, but now it's coming down into that old breakout channel. So as you can see here, it breaks out of that resistance, shows immediate movement to the upside, hits resistance up here now at $97, retraces back down, slows down, retraces back down into the breakout channel, which is now new support. So if you couple this, and again, I think this is very important on the analysis. If the dollar slows down dojis and confirms back up, you could short gold, silver, platinum, palladium, because that's going to have a massive movement to the downside with dollar going back up. I think the key indicator here, Tim, is not on the trigger on gold, silver, or palladium. I think the trigger is waiting for the dollar to find support and confirm. And once the dollar finds support and confirms, you're looking at short trades on silver. You're looking at short trades on gold. You're looking at, and three I'm getting really excited about here, you're looking at short trades on the euro doing the same thing, short trades on the pound doing the same thing, short trades on the Aussie dollar doing the same thing. So when you're looking at this right now, you're seeing strength in the international currencies, you're seeing weakness in the dollar, but that is very short term. I'm looking at that dollar index, Tim. I'm not looking at the euro, I'm not looking at the pound, I'm not looking at the Aussie, I'm not looking at gold, I'm not looking at silver. I'm looking at the dollar index, because once that dollar index finds support, triggers, confirms back up, then you're looking at shorts across the board in the precious metals and the international currencies.
To me, it's a week of mean reversion, obviously, like you talked about. Coach Noah did a fantastic Forex report over the weekend where he talked about all these setups needed some time to kind of, marinate a little bit. They had to come back into these ranges, and they have kind of done that in the first 2 days. I mean, 2 strong red candles bringing us back into old resistance. The dollar, metals, crude oil, so many opportunities just through the major markets, Matt.
Watch that 95 level on the dollar index.
Let's look at Bitcoin. Crypto will not go away. It's like a prize fighter at the end of the round, and you want to knock him down, but it just can't. It's got down here on support, bouncing. To me, it's not even a tradable instrument unless you're doing something very advanced. I don't know what would have to happen on Bitcoin for me to start pounding or ringing the dinner bell, saying, "Hey guys, let's go for a feeding frenzy." It would have to take a lot of fundamental change, a lot of different analysis. Anything in the chart here, Matt?
I don't think it's a tradable instrument right now.
Yeah, but I'm not going to stop watching it. Okay.
And of course,
neither are you. And not only that, it's such a focus by so many people out there. I'm going to want to have my eyes on what other people are paying attention to.
Because I say it's not a tradable instrument right now doesn't mean it won't become a tradable instrument in the future. And so if you're still believe in the crypto space, if you still believe in the technology behind it, I think 99% of the crypto space is absolutely garbage, but that doesn't mean it's all garbage, right? It just means 99% of those, I've been out of the crypto space for a long time, but again, there may be opportunity in the future. And if there's opportunity in the future, you still want to be aware of it.
Yeah, I agree 100%. Let's run through those FANG stocks real quick. I just noticed all green with FAANG, and it just made me excited. Facebook, ugly but bouncing. Amazon, that's
help
not
me
a,
out with Facebook here. I got a trade
yeah.
on Facebook, Tim. Bull call spread. I think it's 180 by 200. Put it on about a week ago when it bounced off 180. Stop loss under 170. Showing a loss so far in the trade. I got plenty of time. What do you think?
There was an easy bullish case to be made about 7 candles ago, and even
That's when I made the trade.
some candlesticks in there that you could have played. There's no doubt about it. I remember we were talking about it on the halftime report. That breakout at 180 pullback trigger. That's what I was looking for as well. I'm already out of a position on Facebook. It's tough. I mean, one of the biggest cautions I ever hear when my mentor ears go on, and you and I are trading partners, so it's different, but the same kind of thing, is when I'm looking at a chart that I don't see the same thing, and a trader starts talking about, well, I did make this entry at this point. I would not dump anything today on a small green candle in the market showing strength and the NASDAQ potentially breaking out. But Matt, if it closed below 170, your trading idea is
my stop loss is like 168.50.
I think that's fine.
Yeah.
You've assessed risk, you've positioned size according to risk, you built a spread to reduce the risk, you have time decay limited, you have plenty of upside if it does kick in and run. The NASDAQ is showing something. It's obviously not where you want it to be.
The NASDAQ is showing something, the S&P is showing something, the Russell's showing something, but this feels like Facebook is just kind of lifted up because the water's rising, right? That's what it feels like today. It feels like the overall mentality around Facebook is still bearish right now, but I got fairly, very limited risk. I got a major support level at 170. I think you just let the trade go until it breaks 170.
I agree. I mean, you have to have a plan and trade your plan, and one thing I would tell you is it's not a trade that you would most likely enter today.
Oh, heavens no. And that's the thing that's kind of driving me nuts here, Tim. And that's why I wanted to get your take on it, because, I've said for a very long time, if the original premise of the trade is no longer viable, you should probably get out of the trade.
But you wouldn't take the other side of the trade either. It's in no man's land. You wouldn't take the bear call. You wouldn't take your opposite side of your position either. That's tough, dude. Let the trading plan play out. That's all that's what I would do.
Like it.
That's what I would do. Amazon hitting near 1900, 1895. Tech strength. You got to love that candle right there, Matt.
Oh, yeah.
Pullback pivot, 20-day moving average. You're within 1 ATR of the all-time high, though, so you're probably going to trade that more as an ascending triangle breakout.
I'd play it as a breakout. This isn't a retracement. I'm seeing this more as a high base type situation, which automatically triggers breakout for me.
Yeah, Apple is the strongest stock in the market. I'm becoming their biggest fanboy. Well, no, I think Warren Buffett is their biggest fanboy. Reading through his 13F, he talks with $1 billion wallets. So
yeah,
it is what it is. Almost, hitting 220 here. We hit 219 yesterday. Strong green candle, strong trend. That's showing you so much strength in tech. Netflix is a tricky one, Matt. I've been waiting for some action. Netflix was one of my favorite companies for most of the year. I don't have any current positions on this. 2 strong green candles, long-term trend line. Any analysis on this chart, in my opinion, has to happen on the weekly. So I want you to kick back real quick on that.
Agreed. But I just want to say something for the subscribers of Netflix who are complaining on Twitter that you are now seeing ads on Netflix. Get used to them. The market liked it. Look at the 2 candles, up 3.5% today, up 5% yesterday. Market loved it. Looking at the weekly chart, Tim, there you go.
I mean, this is really where the overall analysis is, Matt. You don't really love the momentum change, obviously, here. That looks like a very sharp mountain peak where we hit a new high on momentum, parabolic up, and then we broke down on that earnings. We've all been tracking this stock on a day by day basis. This is in a key zone, but it wouldn't surprise me if it continue to come down into like the 300 or the 280 mark at all. You don't have confirmation on the weekly, which is why these candlesticks have me balking here, Matt.
Mm-hmm. I'm very hesitant here. I've seen this play out before. And I know this is kind of nitpicking, Tim, But if it would have came down right here to 340, confirmed at 340 on the daily, on the weekly, I would have had a different analysis. And I know it's not that big of a deal because you're like, well, now, Matt, it's at 340 again. But you're still looking at an overall short-term downtrend. You're still underneath the previous pivots on the daily chart. The weekly chart looks convoluted to me. It looks convoluted. Once again, if I would have had this awesome bounce right here at 340, I would have had a different opinion. We didn't. I think it's a mixed chart right now.
Yeah, me too. Me too. Now, obviously Netflix, the kind of company you don't want to pass on if it does start to break out and confirm. I want everybody out there to keep an eye on Netflix. There will be opportunities on that stock as we move forward. Then the last one is Google here, Matt, on the FANG stocks. And with tech showing the potential here today, and then small caps, I think this is good analysis. Google's been one that I've been bullish on since that pivot. It never really did confirm. You got help with a trade. I'm going to need help with a trade. I'm still in a bull call spread. Remember when I converted it? Mm-hmm. Because it never did break my stop or my risk. I've got plenty of time. I think I even rolled it. Let me get exact. I have October as a spread and I have December. I have two different ones.
So are you short the October along the December?
No, I have two different bull calls. So I have 60 and I have 120 days.
I'd get out of the 60-day contract. I don't like your time on it.
Yeah, it's going to, well, I'm not within my rule at 45 days of having to roll for time decay purposes, but
I'm more concerned about the technicals here than I am about that time because, with you, Tim, you buying a 60-day contract, in my opinion, is different than some other trader buying a 60-day contract, right? And I know that it just is. I trust you with that time frame. I don't trust other people who doesn't have your experience with it. So I'm not that concerned about the 60 days. I'm concerned about the technicals here. I see a symmetrical triangle type situation forming, which could pop either way.
Yeah, I agree. Continued storylines through the week are going to be on China, trade talks, the Federal Reserve, and all that. There's not a lot in the economic calendar outside of that. Fed minutes do come out tomorrow, Matt. I'm sure you and I will read them. If most people picked them up and tried to read them, it would put you in for a nice afternoon nap. There's no doubt about it. So after the bell, I know you enjoy it.
I enjoy them.
I enjoy them too, but it's not exactly groundbreaking information in the Fed
it's boring. Are you kidding me? It's completely boring. But I just think that you should always read the Fed statements and the Fed minutes. I think you should always be aware of what the Fed is seeing. And I was about to say I'm very excited about this Fed minutes, but I kind of am. I'm kind of excited because I want to look for key indicators that if Jerome Powell's willing to come off his monetary policy at all. The economics have been good, but Trump's been, clamoring the Fed for lower interest rates, and which is beyond belief, in my opinion. I love when politicians go after the Fed because I don't like the Fed, but when you're talking about how inflated this market is, and when you're talking about $1 trillion tax cut coming in last year, and now we're clamoring for lower interest rates when we're expanding our debt, we're just asking for hyperinflation. We're just begging to get smacked in the face like, Brazilian hyperinflation or, Argentina or Peru or whatever the case might be. So, I've long been under the belief that the U.S. economy needs to raise rates. I've long been the belief that they should be more aggressive in raising rates to stop the free money monetary policies of the last 10 years. So when you're looking at the Fed minutes tomorrow, I'm looking to see if Jerome Powell is willing to come off that stance of being a little bit more hawkish, and I don't think he will. He hasn't. He's been very clear so far. He's had a plan. He's executing the plan. He's almost like a professional trader. It's amazing.
So is the Federal Reserve run by the richest elite in the world who are trying in a smoke-filled room to manipulate all of our banking systems and destroy our lives?
Want me to put the tinfoil hat on?
I don't know. I maybe, or is it just just an institution trying to do the best they can?
Listen, I do not believe the Illuminati is running the Fed. Let's just put it like that. I think the Fed is ran by economists and academics and whatnot. I don't think they're healthy for the U.S. I don't think they're. I don't think having, I think we need government oversight of the Fed and monetary policy. I mean, we're talking about an organization that controls the value of the United States dollar, which is the #1 tradable instrument in the world and the most important currency in the world. So I think we should have some government oversight over it. But no, I do not think the Illuminati drives the Fed.
Hmm.
Although I
Yeah.
could bring on a few guests to give you a whole bunch of historical data on that.
We can get a few of our buddies on here that would disagree with that
Uh,
statement, Matt,
I,
especially if you.
I'll bet you we got people watching the halftime show that think the Illuminati run it. And you know what? I'm certain there is some nastiness to the Fed. I just don't think we need the Fed. I don't think the Fed does their job, and I think the Treasury should actually do their job.
Yeah, it's really an interesting long-term conversation. Obviously, rising interest rates and
Podcast.
environment we're in long-term, we're going to hit an all-time record for a bull market here tomorrow, depending on how you do
No,
the
we're not.
calculation. We discussed that the other day.
Oh,
That will be in the headlines everywhere. Is what you're going to do.
I know, and people want clickbait. No.
Sure. A couple of areas I'm very interested in today, Matt. Industrials breaking out. There's quite a few companies that I thought were showing a lot of strength. We'll look at those in a minute. A few earnings companies that we have to highlight. But one thing I want to do next, before we do that at the end of the show, is just say hi to all of our halftime crew and also give us a quick like, thumbs up, and say hello. Hashtag halftime crew. Like seeing you guys coming back in here. Matt, the story of the day is Russell 2000.
Mm-hmm.
And you and I were talking about how to go find companies like that. And we were doing some analysis. I wouldn't mind you showing our team out there that perf chart we looked at, and then also walking them through how to scan and find small cap companies.
You know, and we were talking in our pre-production meeting today about, you know, the story of the day and whatnot. And I think both Tim and I agreed that the story of the day is the Russell 2000 breakout. And I asked him the question. I said, well, Tim, if the story of the day is the Russell 2000 breakout, what is the best play? What's the best way to play that? What's the best way to take advantage of that? Mm-hmm. And you can certainly look at IWM. You can certainly look at the Russell 2000 itself. You can play those major indexes, or you can go look for stocks within that index that is setting up in a technical situation that you personally like. So you could go out there and try to scan for a particular stock within the index itself. So basically what I'm going to do here is I'm just going to run a couple scans that are targeting specifically the Russell 2000 stocks. So the first thing is, so I'm at a website called finviz.com. I'm sure many of you are very familiar with FinViz. It's a wonderful website, scanning website, those types of stuff. So if you click on the screener here, you can kind of set up your own scan here. The first thing in the tabs at the top, descriptive, fundamental, technical. So the first thing I'm going to look at here is I'm just going to look at the mid-cap stocks. So I'm looking at stocks between 2 billion and 10 billion. I'm then going to filter from average volume. I do not want to look at the fluff. I don't want to look at the garbage out there. I just want to look at very liquid companies. Now, when I was first taught how to trade, they said over 500,000 is perfectly fine. And I would still say that's a fine filter. But I like liquidity. And what I've noticed is if you have more liquidity on the stock, you typically have more liquidity on the option. Would you agree with that, Tim?
There's no doubt. I always filter over 1 million. So
Yeah.
That 500K thing was what I was taught. But over the years, my experience, there's enough trading opportunities, you know.
Well,
so I want liquidity as well.
And especially as primarily an option trader, right? I might be running a scan on the stock, but I'm not going to trade the stock here. I'm going to trade the options. I'm going to trade the calls. I'm going to trade the puts.
Sure.
I'm going to do that. So I want tremendous liquidity in the stock, and that typically does lead to more liquidity in the options as well. I'm then going to make sure it's optionable and shortable. I'm then going to click on price. Now, typically I go over $10 on almost everything. I don't like to trade stocks that are underneath $10. I like stocks that are over $10. So I'm going to filter based on that. That has 350 companies in this scan so far. Now, these are the filters I put just on the descriptive tab, and that's typically the ones I filter for. Now, since I'm running a technical scan, I don't need to look at the fundamentals of it, but just quickly, you can filter through PE ratios, PEG ratios, EPS ratios, you know, price to book ratios, you name it. But I want to look at the technical condition here. Now, with the breakout and showing strength, Tim, I want to find some aggressive companies that move fast. Okay, I don't want to go trade General Electric here. I'm looking at a breakout on the small cap index. And because of that, I'm going to look at beta. So there's two ways you can look at finding companies that move fast, right?
Mm-hmm.
You can look at ATR, you can look at beta. For me, I think the beta is the better comparison because ATR really just goes to the volatility of the individual stock versus the market itself.
Well, and a big stock can have a big ATR. It doesn't mean it's a high volatility stock, right? Because ATR doesn't factor for the size of the price of the stock. So you
No,
could have like a 4 ATR, but just be like a $400 company. So
yeah, which
beta
means you
is
move 1%,
that's
right?
right. Yeah, that's
Okay.
right.
So ATR goes to the volatility of the stock. Beta goes to the volatility of the stock in comparison to the overall marketplace. So when you do it, like say a beta over 1, I'm looking for companies that move faster than the market, not slower than the market,
Mm-hmm.
right? So basically what that means is if the market moves 1%, these stocks move more than 1% on average. So next I'm going to filter, and now I'm looking for just kind of trends here. So I'm going to do price above the 200-day moving average. I'm going to do price above the 50-day moving average. And then sometimes I like to do price below the 20-day moving average just to kind of maybe get me a nice little bullish retracement of some sort. So for example, here, Tim, looking at TRN, right?
Ooh, that's a good looking chart.
TRN. Okay, you're looking at this type of trend here, higher high, higher low, higher high, higher low, coming back down into the moving averages, pivoting, going back up. That's a very good bullish retracement, which with the Russell breaking out, if that Russell continues to move on the breakout, that's going to pull TRN back up into resistance. That's going to be, that's a potential good trade out there. Looking at coming back down to any though. Now you can now run it. Basically, we have 59 companies that are above the 200 and above the 50. So then I just kind of look for strength here, Tim, and I look for strength on breakouts, and I look for strength on retracements and whatnot. So for example, looking at C, and I don't even know what this company is, and I really don't care what this company does because I'm only going to be in the trade for a short time. So CHGG, looking at a sideways channel breaking out of $30, that looks like a significant breakout. And again, I'm going to go pull these charts up on Thinkorswim as well.
Sure.
Looking at here, 3D company, Tim, breaking out of $20 off of a high base. Looking at potential ERI breakout.
Eldorado looks good. I will tell you, Fleur was on my option report this week. That little base.
That little base right here, breaking out of that base.
Yep.
I like the ERI Eldorado one here a little better. I like breakouts of 52-week highs. This breakout here, I like this potential target in the 60 to 62 level, I would say. That's a good breakout candidate right there. Looking, and then we got, I don't like any of those. So I'm quickly just kind of trying to spot these types of things. High base situation, potential breakout at 21 on Horizon Pharma. Look at this one here, Just I. Just I. They might become my favorite company with one symbol.
I was at a crab boil a couple days ago, and
what is this company?
Intelsat. I've not traded it. Good bull retracement though.
Good. I mean, really good bull retracement. So, looking at that on look at this breakout on ILG here. ILG. Look at this one on IDTI. I mean, check the strength of that bad boy.
That's beautiful.
IDTI. What was it? IDTI, right? IDTI. Look at that breakout there, Tim. Sure. That is beautiful, right? That is, I mean, so when if your analysis is the Russell 2000 is breaking out and it's going to try to play catch up because it's rested, running a scan to find potential stocks that are breaking out, retracing, that's the way I'm playing this right now.
Here's the major takeaway I want everybody out there to think about. Okay. When you see something, there's something you can do. Now, whether you do it or not depends on the day and what you're doing. So today's a light day in the market. The biggest storyline is the small cap breakout. Okay. So what I would do out there if I were you, after you've run your regular routine, you've gone through your trades, your trade management, you've focused on your core strategies. What Matt is showing you here is how traders develop watch list over time. Because Matt, most likely these companies won't be traded necessarily today. They could, you might find one. But it's more important that we're starting to develop and cultivate a watch list within the space of small caps, and actually go back into Chrome for just one moment. There's one tab I want you to highlight, not Chrome, Firefox. You're Firefox guy, huh?
I am Firefox guy.
I'm not going to debate which. They're both fine. I just am not an Internet Explorer guy. I really do not like it. Up here where that perf chart is. See, guys, the analysis, a lot of it came down to this. The Russell is breaking out now But that's not a new storyline. Anybody who's been trading for the entirety of the year, you know that small cap strength is something we talked about earlier in the year. Year to date, Matt, the Russell is the number 2 performing index. And with this breakout, it might play catch up on that NASDAQ very quickly and even pass it. It just depends on the strength and the carry through.
Well, I mean, you think about it. Just think about it today. It's basically 3% underneath the Nasdaq, right? Nasdaq today up 0.75%. The Russell 2000 up 1.3%. So I mean, it can play catch up fairly aggressively. It wouldn't surprise me to see the Russell 2000 catch the Nasdaq over the next, say, month and a half.
Yeah, me neither. Going to be an interesting conversation, obviously, as we continue to move it forward. Couple of companies I want to do some rapid fire with, Matt, 5 or 6 minutes here as we go through them. Number one is Wells Fargo, which is a stock report pick, playing some nice momentum here, WFC.
Would you technically consider that a breakout confirmed today?
I don't like it as a breakout personally. I liked it when it was pivoting and triggering, and you can, yes, by definition, it's breaking out. If it closed above here, here's the problem.
Oh, give me any one of those breakouts on the mid caps.
So, well, not only that, even within the financial sector, I like Bank of America better. BAC.
Yeah, me too. And I like that retracement pivot off the 200.
Yeah, absolutely. It was a good trigger there. Take a look at BBY.
Now that's a breakout.
We've been talking about retail, and Best Buy.
Retail's strong year in the apparels. Retail's up like 19% in the apparels this year.
That's right.
Retail's doing really strong this year.
Retail is looking very, very good.
Well, again, let's just think about if that's going to continue. Retail's been strong year to date. We're going into the season where retail is very important. Consumer confidence has been great. Economic reports have been doing really, really well in the U.S. Consumer spending is high. I mean, is there any indicator that says retail is going to slow down for the rest of the year? At least up until, say, Black Friday, Cyber Monday type news?
There were 4 or 5 things I wrote down for my own self today. And one of them was the XLY consumer discretionary list to go out and find some and pick some stocks, because of the breakout. The Russell small caps, like we've already done, the metals retracement, I'm going to be very interested in the dollar pullback. You guys, when you're a trader, there's opportunity every day. XLY pulling back, Matt. I went out and looked inside this sector and I found about 6 companies I'm interested in. BBY was one of them. It's been on our watch list. Herbalife, HLF, is looking very, very good. HSY,
that's a good retracement right there.
Isn't that pretty?
Yeah, that's very. Say that again. Isn't that pretty?
Isn't that pretty?
That's very pretty.
HSY. Now, I just like the breakout here. Lululemon, which I can say, even as a man, I have a pair of Lululemon pants.
Yeah, my wife fully embraced Lulu, and I have aided to their revenues quite a bit over the last 5 years.
True, it's true.
She's bought me shirts and pants, and I still don't wear them. I wear my golf stuff, but yeah, Lulu's breaking out. Little bit of concern here at Lulu, right, on the breakout coming back down, but that is a wonderful breakout channel on that one out of 130.
KORS.
Oh my goodness, think about this Lulu year to date for a second. Up 60% year to date. Wow.
No, it's a juggernaut. And this is where, when you see something, you have to start preparing and planning. Like Lulu is most likely going to be an entry by the end of the week for me. But I put it on the list today because I saw the breakout in consumer stocks and retail. We've been talking about it. Couple more rapid fire stocks. Then we got to talk a little bit about earnings. Look at Nike.
Nike breaking out.
Just a juggernaut.
And it's insane how retail is doing so well after a 10-year bull market. I mean, it's just, they're doing amazing.
And then a couple in the industrial sector I was interested in. Take a look at Lockheed Martin, LMT. With the Dow playing catch up in strength, it's not breaking out yet, but I would really like a breakout there at 325.
I also enjoyed shorting Lockheed. So
I know it's a political and social statement. Is that right?
no, it just makes me feel better.
I was going to pull you into a political discussion there.
Mm-mm.
Table that. All right, moving on. Cummins, CMI. And I like that reversal potential as well. Retail strength, small cap strength, industrial, some stock picking in there.
I
The
think
metals are retracing.
I think I think you buy into strength here. I do not think you buy into weakness. I don't think you're looking at reversals here. I think you continue to buy the strength.
Yeah, those retail and small caps are
This
going to be the first
market, this
targeted.
market, and again, I've only been trading for 13 years and not 40 years, but I have been a student of history. And yes, every market is driven by the top, right? Every market is weighted to the top, but I've never seen a market that is more weighted to strength than this marketplace is. Those FANG stocks alone drove that market for 2.5 straight years. Those 5 stocks alone did. And so when you're looking at that, I think you consistently buy into strength here.
Tomorrow morning, you have Lowe's and Target reporting earnings. Target is a Tackle 25 stock. Just a reminder there for our long-term vets. If you are having any trades on those companies, like always, you got to go double check earnings and know what you're doing.
Always check earnings.
Yeah. What do we expect from Target here, Matt?
From Lowe's or
Well,
Target?
Lowe's, I'm not that interested in, quite frankly. I'll wait for Home Depot. Target is the one I'd be more paying attention to.
About a 5% expected movement on Target here. That would put your gap range, and again, the market maker move was 450. That would put your gap range 83 down, 79, 78.50 down into here, and then let's just go 83 to 87.5. That'd put your gap range right into there. It's one of those standard things that we've seen in the past. A very established company. Looking at a couple of the recent earnings here, gap range on this one, Tim, 5.75 down to 71, about 4-point price movement. Gap range on this one here looks at a potential down 74 down to 71, about 3-point movement. Gap range on the third one here looks at about 60 down to 55. I don't think you have an edge here. It's a good market maker move.
Yeah. Well, it's going to be one to focus on no matter what. I don't know if I'm going to have a play on it. Probably not here on Target.
But it is a covered call stock, right?
Yeah.
It's a Tackle 25 stock. So anytime you're dealing with a covered call Tackle 25 stock, I think everybody knows that buying insurance on something is very important, and how to buy it is you sell call options, generate the cash flow to buy the put options to call out the trade.
3 companies, real quick. Last thought of the day here. Earnings on Baba on Thursday morning. Cody, make sure you put that in the prep tomorrow. We got to do a deep dive tomorrow, Matt, on Baba, Alibaba. And take a look at Chipotle. Saw a news report here today that Chipotle is instituting a new nationwide employee training program to make sure that they don't get people sick. Matt, does that give you more confidence to go and get a burrito here for lunch?
No.
What's wrong with Chipotle? Chipotle's fine.
No, it isn't. No, it isn't. No, it isn't. It's not fine. It's not a good company. Convince me this is a good company. If you can convince me this is a good company, I'll buy it today blindly.
They make a very quality product.
I'm out.
They have very good brand loyalty. People who eat at Chipotle tend to be very loyal and go back there quite often. I don't.
They have a 79 PE ratio.
Hey, listen, I get tacos off the taco truck.
Who else has brand loyalty? McDonald's. They have a 20 PE ratio. Argument over.
All right, so you're not a Chipotle guy, is that
right?
No,
I don't like companies that feed people E. coli burritos and then those prices go up. I don't like that. No. There's a million. Here's the kicker. Obviously there's, as we've done the podcast, and we're very open on our podcast about the companies we like and the companies we don't. Our loyal followers that have been following the pod and the halftime report, they know all these stories about how Matt doesn't like Chipotle and Disney, and they've heard those stories. But I mean, the simple reality is about 4 years ago when Chipotle was a $700 company, I basically said this was the most tremendously overvalued piece of trash company I've ever seen. And since that time period, I haven't came off the stance. I've been a perma bear on all things Chipotle.
Haters gonna hate. One more stock, Dropbox, Matt.
Is that DBX?
DBX.
Right? Yeah, DBX.
This week, their pre-IPO investors have a chance to unload some of their shares. It's going to be a big play in Dropbox. It's on the 24th on Friday. I don't know what to expect. You never know. If you had made a bunch of money on Dropbox before you take it public, are you going to unload some onto the market? What?
Oh, I'm cashing in.
Yeah.
That's why. Are you kidding me? That's why you take that company public. That's why the insiders take it public so that they can cash that puppy in. Let's get paid.
Next week, if Dropbox is showing weakness and breaking below support, I think it could be a very good, real concern for the short term. I believe in the company. I like the company a lot. I really like their product, their service. I believe in where they're going. But guys, I've seen IPOs even on some of my darlings and some of my favorite companies that I thought were going to be the gems of the market. If they break into a downtrend, Matt, you got to respect the chart.
You got to respect the chart above all things. You got to remove your like of the opinion of the company. We make fun of, with like Chipotle and Disney, Tim. I'll buy Chipotle. Are you kidding me? As a chartist, as a technician, as a trader, as a capitalist, I remove my emotion from the conversation when it comes to trading. I am a fan of Dropbox. I use their service. I've been using their service for years. They're a growing company. They're an expanding company, but you have to respect support. And support right now is at 27 by 2660. If you see a break of 2660, Tim, that could be a tremendous selling opportunity in my opinion. Another company that was in the headlines today, Tim, was a company we use for our internal tackle trading communication, and that was Slack. Slack raised another $470 million to bring their total valuation, Tim, to a whopping $7.1 billion. Slack, a communication channel, which a high percentage of the users use their free service, not their paid services, but they are now a $7.1 billion company. Look for Slack to go public soon.
I like it. I use it. Listen,
I'm a big fan of Slack.
I'm a huge fan. And I'm a huge fan of using and building watch list around companies that you do business with, that you use the service on and all that kind of stuff. That's the fun of the markets. Guys, one of the reasons why we do this halftime report on a daily basis is to come in here and have you guys just kind of tap into our thinking and what we're doing and what we're focused on and what we're building and what we're getting excited about and all that kind of stuff, Matt. Watch list development is a part of any trading day. You don't do it first, right? You don't do it first. You always do it at the back end of your routine once you've already managed your core positions, correct?
Yeah, I mean, obviously, our halftime crew comes here every day to kind of do their daily routine with us and whatnot. But, the daily routine is a step-by-step process, right? So you get the lay of the land, you dive into the heat maps, you manage your trades, you manage your portfolio, you delta weight your portfolio, you check your theta, and then you go into your trading. I mean, Tim, by the time I get into the halftime report every day with you, I've already done my daily routine, right? I've already really kind of assessed all the news and assessed the economics and assessed the trends in the markets. And now I'm coming into this from a trading perspective. Having a routine is so vitally important in trading. And what I hope is that the people that come here every day and watch this when they get off of work, I hope that this helps them, the halftime report every single day helps them apply their routine.
I agree. All right. Matt, we have a very special event coming out here in a couple of weeks, our bear market survival guide webinar. More information on that to come in our coaches show tonight. But we did a podcast with Tyler yesterday. I'm excited about this premium product coming out. What can you say about it?
We're having a webinar here on September 5th at 8:30 p.m. Eastern Standard Time regarding bear market survival guide. The webinar is going to showcase and highlight what Bear Market Survival Guide is all about. It's about understanding and how to spot bearish conditions, understanding how to protect your retirement account, your 401ks, your IRAs, your individual holdings, but also getting people prepared to make money on the downside. It's a premium system and tackle trading that we're releasing and launching on September 5th. I'm very excited about it. Noah Davidson will be the presenter, and tomorrow for the halftime crew, we'll have a link for a registration page that you guys can click on and register for the webinar and come and join us. I'm very excited about it. It's going to be an absolutely amazing event.
Yep, sounds good. All right, that's it for today, guys. Thanks for joining us for our halftime report. We'll be back here same day, same station, same time, and we are out.